Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, the Bitcoin price is in an ascending parallel channel, while the RSI is pulling back in the short term, which is actually something we have seen play out before, which I'll be talking about later in this video, so definitely stick around. First of all, just quickly reminding you that here on the weekly Bitcoin chart, we still have one of the largest bullish divergences in Bitcoin's entire price history playing out right now, which basically means at the very least we're due to see a pause from the bear market. And historically speaking, these massive divergences visible on the weekly time frame play out over usually multiple months. And so far, it's been around 1 to 2 months since this bullish divergence confirmed. So most likely, this will continue to play out over the next few weeks at least. But anyway, now taking a look at the daily Bitcoin chart, and right now the price of Bitcoin is still hanging around this golden pocket range of resistance, which is coming into play in between around 20.9k going to just above 21.2k. But at the time of recording this video, the price of Bitcoin is currently sitting just above the top end of this golden pocket, but we're still yet to actually confirm a daily candle close above this golden pocket. So at least as of right now, we have not seen any confirmed breakout above this strong resistance right here. But if we do end up seeing a daily candle close above around 21.2 to 21.3k, then technically speaking, that will be one confirmation for the breakout above this resistance. And in that case, if we see a confirmed breakout above this resistance right here, then I would expect the price to continue up towards around 22.6 to 22.7k approximately. And above that resistance, we have more resistance up towards around 25,000 to 25.2k approximately. And obviously, in terms of the trend right now on the daily time frame and the daily Bitcoin RSI being in overbought territories, nothing here has changed over the last few days. So if you're new to the channel and you want to know more information about that, then check out my last few videos here on this channel. But anyway, now zooming into the shorter term, this right here is the 1 hour Bitcoin chart. And obviously over the last one day, we've seen this very small bearish divergence play out in mostly choppy sideways price action as expected. And so as of right now, this bearish divergence has already played out. It is no longer playing out because usually these bearish divergences just on the 1 hour time frame play out over around 1 day before they essentially fade away and we continue on with the bullish trend. But unlike these previous bearish divergences here on the 1 hour time frame, this time around we also have a bearish divergence visible on the 4 hour time frame, which is why the price of Bitcoin does not currently have as much bullish momentum as compared to back here, for example. Because basically a bearish divergence means that we're due to see reduced bullish momentum, at least in the shorter term, and especially based on what we have seen throughout this bullish trend, these bearish divergences have basically acted as small pauses during the bullish trend. And so once again, now that we have a bearish divergence here on the 4 hour time frame, this means that we're due to see a slightly larger pause from this bullish trend, which is why as of right now, we don't really have as much bullish momentum compared to back here once again. And of course, another reason as to why we don't have as much bullish momentum right now compared to back here is due to the fact that back here, we had a massive short squeeze acting as fuel to the fire, basically pushing the price of Bitcoin higher and higher as the shorts were getting liquidated. But around this point right here, the funding rate turned very positive, meaning that most of the shorts were already wiped out and the short squeeze was basically over, as I explained in more detail a few videos back, and I'll talk more about in just a moment because the funding rates have actually changed since then. But first, if you look at the 2 hour Bitcoin chart, it's very clear that the price of Bitcoin is in an ascending parallel channel, bouncing around between resistance and support. And while this is happening in the price action, we're actually seeing a pullback in the RSI, which is once again a bearish divergence. Now, it's also a hidden bullish divergence because we're seeing lower lows in the RSI, but higher lows in the price action. But generally speaking, when we're talking about a traditional bearish divergence going up against a hidden bullish divergence, usually it's over overall bearish because generally speaking, traditional divergences are simply more powerful than hidden divergences. So basically this bearish divergence would technically overpower this hidden bullish divergence. But when it comes to the next significant direction in the price of Bitcoin, at least in the shorter term, it ultimately depends on whether we break this resistance or this support. First of all, this support level is sitting at around $21,000 per Bitcoin, and this resistance is sitting at around 21.5K approximately. And now, first of all, if we do end up seeing a confirmed break back below 21K, so this support level just here, then immediately I would expect the price of Bitcoin to head down towards this level just here at around 20.5 to 20.6K approximately. But if the price of Bitcoin confirms a break back below around 20.5K, then if that happens, I would expect a drop down towards around 19.7 to 19.8K, acting as some support. And below that, we have even more significant support down towards around 18.6 to 18.7K based on this previous Fibonacci level. And also we have found a lot of support here in the past. But on the flip side, if we end up seeing a confirmed break above this resistance at around 21.5K, then this ascending parallel channel could possibly play out like a bull flag pattern. Now, traditionally speaking, a bull flag either trends sideways or to the downside after a bullish move. So something like this, for example, which means this being an ascending parallel channel isn't exactly a traditional bullish flag pattern. But with that being said, if we do end up seeing a confirmed break above resistance, it is actually possible for this to still play out like a bull flag, because we did indeed see that actually happen during the first half of 2019. And in fact, the price structure that we saw back then in early 2019 combined with what we saw in the RSI is looking extremely similar to what we're seeing at the moment in the price and the RSI. And in fact, this even came just after we saw a massive pump in the price of Bitcoin during early 2019, which came just after a lot of choppy sideways price action, which came just after a massive crash in the price of Bitcoin, which was the end of the 2018 bear market back then. And by the way, this chart right here is on the daily time frame. And if you're looking at the current Bitcoin price on the daily time frame, obviously we saw that massive crash almost straight to the downside at the FTX situation during November. And then after that, the price of Bitcoin bounced around for quite a long time, for 1 to 2 months actually, before we started the next move to the upsides, which is obviously very similar to what we saw back here during late 2018, entering into early 2019. And basically what came next in the first half of 2019 was a series of short squeezes throughout this bullish move. First of all, we saw that initial pump right here entering into this ascending parallel channel, which is very similar to what we've seen here on the daily time frame. Obviously, we've seen a massive short squeeze already. And right now in the shorter term, we're in that ascending parallel channel. Now, of course, we still need to see a confirmed break above this resistance before expecting the next leg to the upsides. But if that happens, it's possible that could trigger another short squeeze, because if you're looking at the Bitcoin funding rate right now, they are starting to trend back towards the negative side. Because first of all, if you watched my videos just a few days ago, immediately after this pump right here, once again, the funding rates were extremely positive. And in fact, most of this screen was sitting in the red in these numbers right here, these much higher than normal funding rates. But right now, the majority of this screen is back at the neutral funding rate, which is 0.01%. And in fact, quite a few funding rates are now back into the negative. And basically, all you need to know about these funding rates is the more negative they are, the more potentially bullish that is for the price action. And the more positive they are, the further they are into the positive direction, the more that's potentially bearish for the price of Bitcoin. Because basically, these funding rates go further to the upside if there's more and more long positions pushing the price of the derivatives market a lot higher than the spot market. And that poses a risk of a long squeeze, which essentially pushes the price to the downside. But on the flip side, if we're starting to see more negative funding rates, then that basically means more of the market is trying to short Bitcoin and short some of these other coins, which pushes the price of these coins on the derivatives market below the spot price, which makes these funding rates negative. And that's potentially bullish for the price of these coins, because if a lot of the market is trying to to short these coins, then that can lead to a short squeeze, which can push the price higher, like what we've seen over the last 1 to 2 weeks. Because around 2 weeks ago, these funding rates were almost all negative, pointing towards a possible short squeeze happening. And right now they are trending back towards the negative region, but they're not all there just yet. So of course, I'll be keeping an eye on these funding rates and keeping you up to date in these videos each day, and also in real time over on my Twitter, link down below in the description and in the pinned comment. But basically, the more people that try to short Bitcoin and short some of these other coins right now, the better that actually is for the price of Bitcoin. Because like I said, if more of the market tries to short Bitcoin and short these other coins, that pushes the funding rate lower, making it more expensive to short Bitcoin as well and short these other coins. And that's exactly what we saw in the first half of 2019. After a huge consolidation range, we saw a short squeeze, a bearish divergence, another short squeeze, another bearish pattern, a rising wedge pattern, which did initially break to the downsides. And then at that stage in the market, a lot of people were overly bearish on the price, thinking we've already pumped high enough, we're due for a massive pullback, which meant more shorts added to the market, which simply resulted in another short squeeze. So believe it or not, for any of the bulls out there that wants the price going higher, you would ideally hope that more and more people try to short the price, because that would actually help the price. And for the bears out there, you would ideally hope that not as many people would short the price and more people would actually long the price, because that can actually be bad for the price, triggering a long squeeze. But anyway, now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart, and right now the price of ETH is still actively playing out this breakout from this previous ascending triangle pattern, heading towards this price target range in between 1650 to 1.7k. And as of right now, in terms of the trend on the daily time frame, this price target and also the RSI being in overbought territories, nothing has really changed over the last 1 to 2 days here on the daily time frame. And so once again, if you're new to this channel and you want to know more about what's happening here on this daily ETH chart, then check out my last 1 to 2 videos here on this channel. And now just taking a quick look at the shorter term, this right here is the 4-hour ETH to US dollar chart, and we're seeing something very similar to what we're seeing on the 4-hour Bitcoin chart. Obviously a bearish divergence forming higher highs in the price and lower highs in the RSI, which once again means that we're due to see reduced bullish momentum potentially over the next 1 to 2 days or so, before potentially continuing the bullish trend later on, like what we have seen time and time again throughout this shorter term bullish trend right here. And in fact, in these past examples, we saw mostly sideways price action following these bearish divergences for roughly around 1 to 2 days. The first example was closer to 2 days, the second example closer to 1 day, before we continued the bullish trend later on. So that's mostly what I'm expecting in the somewhat shorter term, mostly sideways price action before continuing the trend, unless of course we start to see more trend reversal signals. But as of right now, we haven't actually seen many trend reversal signals for the bearish direction in terms of this trend right here. But anyway, if you want to know how to keep making money in crypto, whether the price is going to the upside, to the downside, or even just chopping around sideways, then make sure to check out these videos popping up right here on your screen. The video in the top left is a complete step-by-step trading tutorial video for beginners, and the video in the bottom left shows you how to make money in crypto if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.